The difference between success and failure in the stock market has nothing to do with your skill set. It has everything to do with your mindset. I'm Evan Lazarus, Chief Knowledge Officer and Mentor for T3 Live. I'd like to invite you to an exclusive trading education event in Charlotte, North Carolina on Saturday, March 16th. Attendees will learn what we believe to be the 5 biggest mistakes that plague the average trader and how to overcome them, with a specific focus on trading psychology and risk management. Reserve your seat at t3live.com or call the number below. I look forward to seeing you there.
Futures are positive again this morning as world markets continue to act well. Investors have their eyes on the euro as the European Central Bank releases statements today. Tomorrow, traders will learn the strength of the U.S. jobs market. I'm Brittany Umar, and the morning call starts right now.
Good morning. My name is Scott Rudd, the Chief Strategic Officer of T3Live.com.
And I'm Brittany Umar, and together we bring you Morning Call. So futures are slightly positive this morning after indices slowed down a bit yesterday. The Dow still managed to hit a record high for the second day in a row. And now with the S&P less than 2% away from its all-time high, the question is, can it get there?
So everyone's always asking questions, where can we go? It's like live in the moment. You know, we just had Dow all-time highs yesterday, some follow through. So now everyone's got to go, to new headlines. What's the S&P going to do? When's the S&P going to get to, 1576, which is the all-time highs? It was a nice milestone to get above 1530 earlier in the week and hold above it because it wasn't a fake out. Every bear in the world wanted a fake out, push through, fail, double top, instead of embracing the action. And recently the action in the stock market and the rotation we've had in the stock market has been rewarding everyone on every time frame that's been approaching it with a plan.
So the media likes to focus on those solid numbers, those all-time highs, but you're not as worried about it.
Well, it's good to bring attention towards the market. It's good to have people think that they've missed something because, we've had every crisis under the sun that the media has definitely focused on as well besides these milestones. So a lot of people have gotten out of the stock market so they don't realize that they could actually make money here. And if you go to the chart of the S&P, you'll see this was that, last breakout above 1530, okay, which, remember this little corrective process? Well, it was short and it was swift. And even if you did take some money off the table here, you had some opportunity on this reversal to buy some back or maybe in this digestion to get some positions you like for this breakout. And you go to your monthly chart, and this is what everyone's starting to focus on, which we've been already looking at for a while now, and even in the 2013 thesis, here's that double top. Do we see resistance the first time we get there, or do we just break above and continue? And for 2 years now, we've been talking about the S&P road to 1700 by 2015. Maybe it happens sooner, maybe it happens later, but the only way you're going to make money is if you approach it with a plan.
Well, today traders will likely look to be waiting to look to Friday's jobs report for clarity on the market's short-term direction. Do you think the jobs report could have a possible negative effect?
I think it's what's interesting is if it's a bad report, then they'll say, oh, the Fed's not going to leave. They're going to continue to do their $85 billion in buying. Okay, if it's a positive report, you know what? It's working. It's getting better. And if it's actually too positive, maybe the market will go down because they'll think that they're going to remove the punch bowl, so to speak. But overall, the composure is intact. Yes, could we correct a little bit, which people say they want to buy, or do we push through? That's why you don't have to be all in or all out. You have positions you like, you use a tier system around it, you actually adjust the amount of positions based on the risk and what you have. If you don't take a lot of risk into a jobs number, then you have less positions on and you wait. But if you like things, don't just get out because everyone's going to say, oh, tomorrow the jobs report's just going to leg sweep all the bulls and they're going to finally get theirs. I don't think that's what's going to happen.
Well, in the meantime, traders definitely want to stay with the rally and find potential setups. Let's talk about the banks, which had a big bounce back yesterday. Some of the strongest banks are already back at highs. Stocks like BlackRock, which put in a new historic high of 250 yesterday.
Yeah, and this has been like a stealth winner. I know it's something that I don't focus on. I focus on some other banks, but some traders were buying it and involved yesterday. So you look here at BlackRock, it shows you that, after a pull-in like we saw from the highs, there was another setup where you could have bought back support and then boom, new highs. So that's showing health. You know, it's been a heck of a run during this entire period, and here was another type setup. So that making new highs, you know, gives some traders some I would say some courage to look for other ones that could be making new highs.
Exactly. Stocks like JP Morgan, another strong stock that's already back at highs. It snapped right back to the upside yesterday and put in a new high as well.
Yep, and this is something we focus a bit more, you know, at T3 because JP Morgan is on more people's radar than BlackRock. So for this to make, you know, new highs, it's great for just say America because a lot of people out there are probably invested in JP Morgan. It's also, you know, a good headline situation to attract money to the banks, but overall for the health, you know, if you bought this dip, which it was a decent dip to buy, it shows you that after a nice igniting bar, it can go sideways and make new highs. So I think what traders are going to start focusing on, are there other banks that could have the same type of setup as JP Morgan and BlackRock to make some cash flow?
Right, but not all banks are at that point. Stocks like Goldman Sachs have not quite gotten back to those highs just yet. You did see nice action yesterday, but do you think it has what it takes to get back to its year high of 159 anytime soon?
Well, that's what we're looking for. We're looking for catch-up plays. You have the two dogs, or not dogs, but the alpha dogs that are at highs, and then now you have some that are lagging. So I guess you could say they're a little doggy because they're not leading, they're lagging. But anyway, Goldman Sachs, which has been a leader during the most parts of this move, has not made highs yet. So traders are trying to think if there's still opportunity there. So you look at the chart here at Goldman, you know, it also corrected, stabilized, you know, traded above this 152 area that we spoke about. So now I would say this 155 is a pretty big pivot. If it starts to get above 155, I would think that even myself might buy some to see if it can get back to the highs and make new highs. You know, I think that this move was, you know, so long in the tooth that it wasn't ready just to, you know, correct and go. So with a little bit more time, I do think it will make highs. The question is, does it need to hold here for a little bit and then go, or just continue? So that 155 will be important.
Morgan Stanley is another stock like Goldman that hasn't gotten back to its highs yet, still lagging the group a little bit. So at what level could we see this bank set back in motion?
Well, it held support. Morgan Stanley has been an interesting animal, so to speak, because during the whole corrective process, it always corrected a lot more. And people tend not to trust it as much as a high quality name, but then when it goes, it has action. And typically it goes somewhat last. It doesn't lead, it kind of lags. So if you look here at the chart, I do think there's opportunity. This was the gap up, I think, you know, after earnings, and it continued. Here was your wide range bar that gave you a hint to get out of the way, you know, because you saw this accelerated trend line or elevated trend break. And then this was pretty potent to the downside. Here was your red dog reversal, and now it's hovering in the lower third of this overall range, and the range goes all the way up to, you know, 24 and change. So I did buy some a little bit yesterday, and if it can get above this 23 with some kind of power, you know, there is some room to get back to highs. So I think that's the type of trade that some guys are going to be gravitating towards. But again, you know, you really want to go with the leaders, because if you go to with a laggard and the market loses some steam, usually the laggards get hit the hardest. But if we do broaden out, you know, these laggards could, you know, be good opportunities for cash flow.
Well, while it might not be a leader, CIT Group, a name that we don't always talk about as much on Morning Call, looks like it has a lot of the right tools in place to open the door for higher prices moving forward. So at what level might we see it do so, and are you attracted to this one?
Yeah, and I got involved yesterday. Not because I know the company well, just because of the price pattern. There are two things going on in this chart that I like. You go take a look at it, you'll see, first of all, you had a big gap up after its last earnings. Okay, now what has it been doing? For almost 2 months, it's been going sideways, consolidating this gap up. What couldn't they do? They didn't fill this gap, so it's showing you some power. So just the question is, can it break out? So right here, you know, I think it's a good tier 1 long. If it starts to get above this 43.20, I'd probably add for a breakout move. Here's your last point of reference, which is about 43.90, and then overall, you know, this stock should be poised when, you know, as the market wants to continue higher, and look at this nice pattern here. So this is something you can go with for cash flow and maybe stick with a little bit longer if it triggers.
All right, sounds good. So coming up, we're going to be going in the trenches with casino stocks, which are perking up a little bit. But first, a quick commercial break. We'll be right back.
I'm Evan Lazarus, Chief Knowledge Officer for T3Live.com. You don't become a great trader by watching videos and taking courses. You become a great trader through live screen time. Accelerate that learning curve by tapping into the experience of seasoned professionals. Currently, we're offering 5-day free trials to each of our 4 mentoring rooms. In the mentoring rooms, we teach our strategies in the context of the live market. To sign up for a free trial, go to the T3 Live education page, fill out the form, and get started when the next trading session begins. We hope to see you in one of our mentoring rooms.
The casino group has been a laggard sector but has been acting better as of late after online gambling was legalized in New Jersey. Macau gaming grew 11.5% in February. So where do you think casino stocks can come back into play now, Scott?
You know, for the past few years, we've been playing the casino stocks, and I hate, first of all, I don't like playing in casinos. I don't like gambling, and trading is far from it. I don't know, do you like going to casinos in Vegas or in Atlantic City?
I'm not a big risk taker, so I like to play it safe.
Okay, well, anyway, sometimes the casino stocks obviously give you better risk reward parameters when they're moving, and over the past 2 years, they've been leading groups, and I would say this year, you know, they've been a little bit out of play. They've been, you know, stop and go type of scenario. They started the year off decent. You know, if you look at the chart of LVS, you will see that, you know, here was the start of the year. You had a nice channel, okay, gapped up. And you know, and then you had a nice move, and from that, you know, pivot point, or that I guess top, so to speak, it's corrected. There's been a lot of news out there about, you know, some of their tactics, about Macau, the whole 9 yards. I'm not going to get into it, but overall, you have another wedge type pattern. So with that said, yesterday it perked up in a quiet market. So I would say if LVS can get above 52.35 with some volume, I would think that this group will come on traders' radars, and then, you know, you have the high right around here. Then ultimately, if you remember last year, this group was even, you know, much more in vogue. Look at the peak that I put in there. So it is lagging a little bit, but again, as the market broadens out and traders look for things to do, you know, they sometimes gravitate here. So I would take a look at LVS to see if it could help lead the way.
All right, and let's talk about WYNN too and see if there's a potential setup there, because it's consolidating above its New Year's gap around 115, 116. So could it get a push higher?
This one has changed gears so many times. Like a few years ago, this was like the alpha leader. WYNN could do no wrong, and then it started to get faulty, and then LVS took over, and then it went back and forth, and it's been very choppy. So I think investors have been a little upset with this one because it's not showing the leadership that it showed in the past few years. But here we are. You know, let's trade real time. You look at the chart. You do have a pennant type pattern here, and if we were to correct, you know, this would probably be one of the groups that might go down first because it's not leading the way. But if we hang in there, you know, and traders need something to do. Yesterday, it tried getting above this 117.50. Now I think if it can get above, you know, 118.75, you could get some action to the upside. If you look on a macro sense at this, you know, stock, you'll see that, you know, it hasn't really done much. Ever since it peaked right here on that outside day, it's been just slowly, you know, going to the downside. And this is the first time it actually made a higher high. And you do actually, you know, you take a look at this trend here, you have a series of higher lows, and the question now is, can it get going to the upside? And if the economy is going to go, you know, get better, maybe they could charge it a little bit more with room rates, you know, et cetera, et cetera. So I think it's worth a look.
All right, what about MGM? Because this chart doesn't look like it's as strong to me, but is this still one to keep on your radar?
This one, you know, it's never the leader. It's always like, okay, if the group's hot, let's see what MGM's doing. You know, and MGM still, I think some look at it as a value play, almost a little not as risky because they don't have the exposure. At first, it hurt them that they didn't have the exposure in Macau because that was where the growth was. But now when there's some conflicting views out of China and some people don't trust some things that come out of there, this is a little bit more Vegas-centric. So you would think as the markets go higher and as the economy ticks up a little bit, they would turn to MGM because that has the presence. So if you look here at the chart, you will see that, you know, again, it's not a barn burner, but you had some nice action earlier in the year when it broke above this $11, went up to the upside, had this breakout that failed. You know, that got me out of the stock, and now, you know, you can look here, it still has a trend line. It's coming into this resistance, I'd say above 1230 or above even like this whole, all these moving averages with some authority. Perhaps that could bring it back to the highs. So at this point, if you're holding 8, 9, 10, 11 positions, perhaps MGM could be one of them. They can't all be high beta, you know, big time momentum names. So this one, you know, could be on that radar.
All right, well, time for some quick hits here. Let's talk Apple, which once again could not sustain a bounce. So what level does it need to hold to stay out of trouble?
Right now, I would say 425. Tuesday had a really nice bounce back to that prior breakdown of 435. You know, it got rejected there. You know, I actually got long on Tuesday a little bit, took it overnight, and then I said, you know what, this time I'm going to sell a little bit into 435 and then see if it could hold up. You know, so, you know, if you're on the virtual trading floor, you saw within the first few minutes I was out of Apple, and then if it would have held, I would have probably got back involved for a move through 435, but what happened? It didn't. Same old Apple. If you look at the chart since this high here at 700, the same old non-committed Apple that has been trapped in this downtrend all the way down where you could play little bounces, but I think more money's been made on the short side. You know, so with that said, you want to take a look at where it is right now. You know, you want to take I'll get you a little a little bit more in depth here, this is what happened. Okay, this was that prior support that turned into resistance. We failed there again, closing the lows. So what do you know today? You have 424.43, that's yesterday's low. If we start taking that out and we get to this 419, if that doesn't hold, then all of a sudden, these more macro levels that we've been talking about during this move come into play. And unfortunately, if you're an Apple investor and you held your nose and went underwater this entire time, here's those macro levels. It comes in like a 396 and then even lower. So watch this 419. And again, moving averages are your friends, and so are stops. And once it broke that 21-day moving average here, which was a different type of trend that was in place during the course of this run into the iPhone 5, that was your heads up. Here was your heads up. Here was your heads up. So learn what a heads up looks like, so this way you don't just get stuck.
Gotcha. All right. And Facebook was unable to follow through to ignite the macro cup and handle pattern that you showed us yesterday. And of course, eyes will be on the company later when it has its event where it announces the redesign of its news feed, which could it be a possible catalyst?
Sometimes there's a thing on Wall Street where you always sell the news, you sell the event, but sometimes they run into the event. So I almost think it could be positive that it didn't run into the event and it's kind of tight. So if they happen to have the event goes well and people see the news feed and they like what they see, and analysts believe that they can monetize that, which is what the whole thing about Facebook is. Can they monetize their user base, which is huge? Can they have advertisers looking to reach a younger audience, which is on Facebook, start spending money? So overall, there's a lot of questions that need to be answered. You look at the pattern, it's constructive, but it's still not ready to go yet. Here's your big cup and handle pattern. Here is this tight symmetrical triangle or handle, so to speak, and that's your key resistance. So at this point, here is that reversal that got me back in the stock. I am still holding it here. So watch around 1 o'clock. If you see heavy volume and it starts to get above this 2820 level with authority and closes above, I will add to that. But until that happens, I'm going to stay in tier 1. And then just remember, this 26 area should be your stop, because if it breaks that, then you'd never know how long it's going to take for this thing to get going.
Good to know. Okay, and shares of BlackBerry rose 6.1% yesterday after the CEO said the new Z10 has drawn more interest than expected from users of rival smartphones. So while I'm going to stick with my iPhone, should I be tempted by BlackBerry's chart?
We've been trying for the past week to buy it in the bottom end of this range, and I know I tried to buy it. I bought 1320s, 1365s, hit out 1320. Next day, bought 1350s, 1365s, hit out 13. So as you can see, my success rate in BlackBerry has not been great. But if you look at the chart, it doesn't know how I did it. It doesn't remember my action there, but you had a little wide range bar here. So, it did close strong. And I would say if BlackBerry could get above and stay above this trend line with heavy volume, which comes in like I did over here and over here, 1365, 1370, perhaps, you see a move back up. We liked this on off the charts way back here, over the summer when you had this nice basing pattern and it picked up right around here. So at this point, at least you're not chasing 18, maybe down here around 1375. It's a little bit more interesting.
All right, and over in precious metals, the GDX finished up 4.2% yesterday, and this miners ETF has sold off heavily during the past 6 months. So does the chart just need time to repair?
Well, a lot of people, or at least the gold bugs have been waiting for a gold move. A lot of people have been hurt in the miners. So all of a sudden, yesterday in the morning, everyone's like, "Oh, is that a red dog reversal finally in the miners?" And I don't really trade them, but a pattern's a pattern. It's like, you know what? It was. You look here at the miners and you see what happened. You go to the chart. It's coming from 56. It's been downtrending all the way. It's very extended from the moving averages. So yesterday on this pattern, it was a red dog reversal. It tried to break below this previous low, and then got some people out, maybe squeezed some shorts, got some bottom feeders, and then engulfed this entire range. What was even a bit more important here, if you go to the basic studies and you go to your volume, you will see it was done on heavy volume. So with that said, there's a lot of resistance in this. So towards the end of the day, I got involved just because I want to show that I could be involved in other things that I'm not that comfortable with. But anyway, here it is. So same old, same old. Okay, for a trend to change, you need to see commitment. So what you'd like to see is it hold at least half of this. Okay, and if it holds half of this and goes sideways a little bit, then your next buy would be above 37.45. And then with that said, the next resistance comes into play right around here. So the question is, does it hold this level and defend this volume, or was it a one-day wonder? And I'll stay involved as long as it stays, just say, above, what is that, around, I would say 36.75-ish will be my out, and there's my add.
All right, so What is your strategy heading into trading today?
I think it's been the same strategy all week. After the 2 weeks of volatility that we saw and we weren't sure whether we'd continue, I got back involved. Not at my highs of 15 positions like we were in just say January. But I think I've been hovering between 7 and 9 positions, all different ones, trying to add to them, trying to take off, trying to make cash flow, trying to let the rally make me money without opinions. And as we extend higher, you just have to trade a little bit different. Now as we extend and get a little bit away from some moving averages, maybe you take a little less shares, maybe you add to, if you're, I hedge with the spiders short. So I am, I've just said, I think I have 7 to 9 longs, I'm not exactly sure, and 1 short. If we were to extend, maybe I would, short more, but if all of a sudden too, in the spiders, if we pull back a little bit today into tomorrow to test the gap from Tuesday, maybe I'll cover more of that hedge and then add to longs and continue to manage the ranges with my risk tolerance, but I'm going to stay with and embrace the rally and the trend until it changes, and not just trying to call a top, not trying to make headlines, and just play along, because there is a lot of money being made around the world, so to speak. If you've said to yourself equities are far from dead and disagreed with some of the headlines from last summer, and I think that's still going to be the case, but it always changes a little bit.
All right, well, that's your morning call for this Thursday. Happy trading, everyone. Have a great day.
I'm Mark Sperling, Director of Trading with T3 Trading Group and contributor to T3 Live. Do you trade on your own, but you wish you enjoyed the benefits of a large trading floor? With the T3 Live virtual trading floor, we deliver that experience to you on your computer. On the VTF, you can follow the long and short positions of experienced professional traders like myself, Scott Redler, and others, and listen to our live radio stations as we navigate the markets. In addition, you get the added value of a large community of sophisticated and like-minded traders. Your membership to the virtual trading floor also includes access to our 2 very popular newsletter products, Off the Charts and the Price Point Sheet, at no additional cost. In my opinion, joining the room will be the best trading decision you will ever make. I would like to invite you to begin your membership with a 7-day free trial. To get started, visit t3live.com and click on the virtual trading floor tab. Have a great day, and I look forward to seeing you in the VTF.